Welcome to The Disruption Is Now. Join us on this enlightening journey as we explore how AI is impacting our jobs, careers, lives, and the human experience. Each episode, host Greg Matusky will converse with visionaries and innovators at the forefront of AI, diving into its challenges, opportunities, and impact. So buckle up as we venture into the heart of disruption, and together, let's unfold the future.
Hey, it's Greg Matusky, the host of The Disruption Is Now. We are filming all day long here at Money 2020 at the Venetian in Las Vegas. We're meeting with some of the leading authorities in Fintech and how AI is powering new solutions for all kinds of financial institutions. We're excited to learn. I've had a great day just doing the interviews, and I'm sure you will learn a lot on this episode of The Disruption Is Now. Well, The Disruption Is Now is on the road again. We're here at the Venetian Money 2020, and I'm here with Glenn Kurban. He's one of the partners of Capco, which is a tech enablement company in the financial services space. Glenn, thanks for being with us, and let's get right to it. Now, what's hot in technology that you're working on with financial institutions?
Yeah, no, thanks for having me. I think we all know the answer to that question. We can't have a conversation these days without talking about AI and Gen AI. And certainly within financial services, our firms, clients, et cetera, are interested in how do we embark upon that journey? What should we be thinking about in our roadmaps on technology and data? And typically the idea is how do we please our customers given the technology that's available out in the market?
So where do we stand in that spectrum? I mean, there's so much, for years there's been hype cycles around AI, and then ChatGPT comes out, and now we have the tools to actually deploy it. And there's a great hype hump, I think, that we're a part of. Where do you see it as going, and what does it mean for financial services?
Yeah, no, it's a great question. So I think every firm on the planet right now, certainly everyone we're speaking with, is very interested in how they should be embarking upon this journey. I think financial services, as a historically conservative industry, they're moving forward very tenaciously. And so what we're typically talking to our clients about is how do we find problems to solve using AI, Gen AI within the organization that can be very well controlled. You can keep the risk down, but you'll still see benefit and cost takeout and all of these things as a result.
And before our interview, you were talking a little bit about where you see the greatest productivity coming and where deployment will come most quickly. Mm-hmm. Tell me a little bit about that.
Yeah, we're seeing a lot of back office types of use cases. So how do I take projects and programs within the bank, whether it's a legacy modernization or derivement of requirements about new systems and processes? How do I take AI and actually apply the capabilities of AI to make those things faster, more repeatable, where I'm not reliant on throngs of people to do it, and actually I get sort of cost savings out of it, and I get in some cases better accuracy out of using AI.
I've got a very specific question about AI. And it really goes to the nature of the beast, which is a black box, that we really can't tell what happens within them. I have interviewed probably 30 different data scientists, and every one of them has told me that we really don't know what's going on in some aspects. So if you're building right on one of these foundation models and you don't know what's going on, can you ever achieve full compliance, do you think?
I think there's going to be margins of risk that you're going to have to be willing to take. And what we're seeing and what we're recommending is you almost have to bump up the testing approach that you might have historically used. Now you've got to really amp that up because there's so much validation on the model. There's so much validation on the data that might be fed into these models. And banks historically have had challenges around things like the governance of their data, the quality of their data. And so that is actually becoming a focal point right now, because if you're looking to employ AI and Gen AI capabilities, you cannot do that on bad data, right? So I think there's a reckoning that we're seeing with our clients that, well, I really have to kind of double down on my governance and data quality efforts, much more so than I've had to do in the past.
So where is that data? Where is it located? Is it local? Is it in the cloud? Are we Are we there yet with regard to our confidence in the cloud and what processing will take place in AI as part of that process?
Yeah, you're not seeing really any clients that are looking to do any kind of on-premise data applied within AI models. Typically, that data, if you're going to go down the AI and Gen AI path, is going to be in the cloud somewhere. However, to your point, there's still data sprawl all over the enterprise. And so another part of the journey is figuring out, how do I bring all this stuff together in a meaningful way such that I can lay, a large language model on top of it, and I know that the data is reliable and I've sourced all the right golden sources of data.
So help me out. You said back office is going to be one of the first areas where deployment happens. How far away are we from things like fraud detection in AI, customer service with call center, AI? What are we looking there in a timeline?
Yeah, interestingly enough, a lot of those things are happening already. So
give me some idea of what you're seeing.
Yeah, for sure. So fraud detection, there are models being employed right now where, for KYC and transaction monitoring firms, and obviously a lot of software vendors that we're seeing here at Money 2020 are, producing these types of wares and capabilities. On the customer service side of the equation, we've had chatbots and these types of technologies for quite some time, but I think the now the next level of those, to where data sources are available to these chatbots that were not historically available, and then the AI and Gen AI capabilities are able to take the next leap towards helping to solve problems that a customer might have when they call into a call center.
So if I'm a financial services enterprise, right, what would you recommend? What foundation models are you looking at and suggesting that they are most compliant, most secure, that you feel most confident in?
Yeah, so I go back to, and this is, with a lot of the conversations we're having right now, there are efficiency plays with, in a lot of cases, IT, product organizations. So how do I now take, what we typically see in most organizations around agile and scrum ceremonies? I can actually employ AI and Gen AI capabilities to start taking some of this very labor-intensive manual conversations. I'll give you an example. You might sit down with a product owner that's describing to you what they want in the next release of this software or product to be available to customers. Well, I can have a bot listen in on that conversation, transcribe all that to text, and actually turn that into requirements that will be given to a developer that will then be developed into code. And if you take it to the next level, the code could also be automated, and then testing and deployment just based on the capabilities that are available. 2 years ago, we were in no position to do any of those things.
So if I'm inside the organization, how do I define what I don't know? And that is, where are my biggest savings and my biggest points of pain? What do I look at? Because that's always, I've deployed a lot of AI in my own little PR firm. We have about 120 people in 4 offices. And we really try to figure out what creates the most friction with clients and overcome that with AI. But we've built a ton of shiny, bright things that we find people don't use either, because we could do it, because it was fun. So where do you begin as an enterprise to find those real cost savings and what you think is going to be the AI transformation?
I think you hit it there. So a lot of our clients, they're looking at these large multi-year programs where there are opportunities for cost takeout because they've got, hundreds of resources that are either involved with requirements gathering or development or testing. Well, now the tech is such that I can actually employ AI and Gen AI models to replace, in some cases, humans around that. But we have to be very cautious about completely, upheaving that model and replacing humans in totality. We want the human in the loop concept so that anything being cranked out, by these models is actually being vetted by a human at some point in the process.
And so within the enterprise, where's the pressure coming from to adopt AI? Is it at the board level, which says, what is our AI strategy? Is it at the IT level? Is it at the customer service level? Is it at the customer level? Where do you see buyers saying we got to move because we've got a fiat from XYZ?
Mm-hmm. Yeah, I think typically we're seeing it from the board level. We're seeing it as a cost takeout and a efficiency play within IT organizations. So they see this next wave as being transformational in terms of how IT operates. We're seeing product organizations that wants to take advantage of these capabilities in the market. I don't think you're hearing as much from customers, to be quite frank. I've never heard a customer say, I want to talk to a machine versus maybe getting a person on the line that can actually solve
the
a problem.
only thing I say is I want to talk to a better machine.
That's right. Yeah. If it's a good
when
machine.
I have to go through 3 customer service and they all ask me the same thing that
That's right.
I was originally asked.
That's right.
Well, Glenn, thanks for being with us. Really interesting stuff. As we go forward, I'll be interested to see how fast financial services really deploys and sees benefits from AI, because really that's what it's about. It's about, in the end, it's about higher quality products at a lower cost for the organization. So thanks for being with us.
Thanks for having me. Appreciate it, Greg.
Hey, we're back for day 2 at Money 2020. This is The Disruption Is Now, the podcast about all things AI. I'm excited here. I have the CTO of Abrigo, Ravikumar Nemalikanti. Did I say that right?
You said it right.
All right.
Yeah, just took a few tries.
And Abrigo provides software solutions for banking institutions, mostly community-based banks, of which there's 10,000 across the country, and their target's really on 2,500. So give me some idea about what you're seeing here, what excites you about fintech as far as financial lending institutions.
This conference, you mean? Yeah, look, I think the Money 2020 brings in so many fintechs that are working on critical problems in the space, right? We're talking about payments, we're talking about compliance and risk management, which is a rapidly evolving space with technologies like AI and ML that's been around for a while. Just to see the innovation in such a packed space is just fantastic and exciting.
So we were talking specifically before we went live about what Abrigo does for community banks. Yeah. Give us a rundown first of what you do, and then where's the puck going as far as your product pipeline and what you see will be important in 2025?
Oh, great question. So if you think about a bank or a credit union, we have about 2,500 financial institutions in the US as our customers. The front office, which is primarily around lending and origination and relationship management, we automate all of that workflow experience for lenders. So all sorts of origination, commercial lending, agricultural loans, construction loans, you name it, SMB, right? So we automate all of that with a focus on efficiency and automation. And on the back office, we help banks and credit unions manage the risk and be compliant with ever-changing regulatory landscape. Think about anti-money laundering or asset liability management, fraud detection, right? So that's what we do for 2,500 banks in the US. In terms of where the puck is going, look, our mantra is simple, right? We help the little guys compete, right, with the big guys like the Chase, the Bank of Americas of the world. So for us, just to fulfill that mission by bringing in technologies that they themselves can't afford, right, and open the aperture for them for the innovation, right, that we can bring in either through us or through our partners with fintechs that we work with is what gets us going.
And that's a really important part of the economy. I mean, community banks and credit unions, they fill an important niche in communities and helping build those local small businesses and those local economies that big banks can't touch with the same on-the-ground decision-making,
that's right,
networking, relationship building. So that's impressive. It's also impressive that these smaller regional banks and credit unions have to compete with the big boys. And those big boys are pouring a ton of money into technology right now. So help me understand, right, how it levels the playing field somewhat with respect to these small community banks.
Great question. Just to put that case in point, Chase has about 900 data scientists working for them. We are the innovation arm for these 2,500 financial institutions in the US. What that means is we are bringing in the scale of technology, whether it's working with OpenAI and bringing in new LLMs or AWS and bringing the innovation that's happening with the AWS landscape and bring that power to these banks, right? Every single one of them, right? So in the last 2 years, we've launched new fraud detection products, right? That again, not everything is built by us. We partner with Mitek, right? For a check fraud detection, right? Understanding the check image and 24 different ways we can look at a check, right? A community bank, right, that's 2 billion in assets, right, cannot build or cannot just directly go partner with Mitek and bring the technology in-house. We bring that to bear, right, for these banks and credit.
So let's really put the compliance and regulatory lens on this so that we can understand just how critical that is. And you had told me earlier the notion of explainable AI, which I had always thought was transparency, but now I guess with AI we call it explainable. So go through that for me. How does it become explainable, and why is that so important and often not really discussed in the way with the seriousness that it should be?
Oh, there's multiple different ways you have to think about explainability depending on different customer experiences, right? So it could be an internal employee experience. It could be a fraud analyst that's looking at a fraud alert and be able to explain why that alerted. Because what happens is every fraud alert, right, creates a little bit of friction in the customer experience, right? The number of times I get alerts that, did you actually make this transaction? Yes. I've done this 15 different times in the past.
It's the bane of my existence.
Yeah,
right?
exactly.
My credit card's not working because I'm in Las Vegas instead of Philadelphia.
Yeah, get the data together. You know me, right? You know the pattern. So I think the power of data to really reduce the friction, and there's a good balance between creating friction and creating different workflows for the bank, right? Different alerts. So you have to hit the right balance because you can go very easily one way or the other. So that explainability, back to the question that you're asking, be in a position to understand the data, whether it's you're using whatever the latest technology is. You want to use generative AI for creating the narrative for the fraud analyst, or using ML to understand the anomalies in the data, right? You have to be able to prosecute the data different ways and give you, the fraud analyst, the best compilation of information, right? That gets them to the right answer, right? And not go around and talk to 15 people. Then you kind of defeated the purpose. So that's a fraud case. Think about a lending case and you're in the middle of making a credit decision, right? What you don't want to do, right? And this is all for the fairness laws that we absolutely should have in this country, right? Whether it's 1071 or consumer protection, right? You have to make sure that you're asking the right questions, right? And not, again, I walk into a bank with a check, right? And I just sold my car. What is the question that the teller should be asking? Hey, are you interested in a loan? It looks like you got a check from a dealer, right? Those are the sorts of questions that I think if the system can prompt them, because people may not see it, right? That's what that explainability could come in terms of bettering the customer experience, or it could come in the form of a credit decision, right? That especially if it's an adverse decision, you have to make sure that you have all the data in place.
So I got one last question for you as we look forward. You know, we all talk about the hype cycle. I think we know where we are in the hype cycle. What about the deployment cycle? How hesitant are enterprises to take action once? I'm hearing there's been a lot of study, but the deployment has still been hesitant. What are you finding?
100% accurate, right? And history is proof to this, right? I mean, you think about 2023, US GDP was 26 trillion. And I'd say about 8% of that came from financial services and banking. You look at any survey out there, right? Could be done by McKinsey, Accenture, Deloitte, right? Every single entity would say that by 2030, by 2035, you will see maybe 2 to 3% improvement, right, in GDP coming from AI. So all the capital intensive actions are happening now. I still think that we are a little bit away from true value, right, impacting. And we are certainly going in that direction. It'll just take a little bit of time because this is fundamentally re-architecting how an organization should work to fully leverage the AI portion of it, right? Maybe some workflows shouldn't exist, which means jobs, right? So that'll all take a little bit of time to fully come to fruition.
Well, I thank you for being with us. A fascinating conversation. I could speak for you. I could talk to you for another half hour. But
same here,
appreciate your time and good luck with the rest of the conference. And I'm sure we'll run into each other on the floor.
Yeah, looking forward to it. Yeah, have a good conference. Yeah.
Well, we continue on here. It's day 2 at Money 2020. And I met a very interesting guy. I had to have him on the podcast, Thomas Dougherty. He's director of research and development at Glitch.
Yeah.
He's also a PhD out of Stanford who studied computational linguistics as an undergrad or a master's student.
It took some classes in it. My research was in climate sciences. I was using a lot of AI for it.
So now let's take it and switch it over, right? We're doing climate research and AI, and now tell us about Glitch and what you're up to.
Yeah, so Glitch is an automated trading ecosystem that we're developing. And the main mission with Glitch is to take highly curated strategies, trading strategies, and bring them to as many people as we can. So the way we're doing that is we're letting people spin up an exchange, and then we're having them register with Glitch. We're building a trading bot that takes a strategy, connects it directly to their exchange, makes trades on their behalf.
So this is really an autonomous agent working on your behalf.
Yeah, that's right.
And you picked a strategy from one of your dashboard, one of your formulated approaches from, give me some range of the strategies.
We have a list of strategies that you'll be able to choose from, different trade pairs if you like it. You know, maybe you want to trade crypto, maybe you want to trade currencies. We let you choose essentially what you'd like to trade on and the amount of risk you'd like to take. And then you subscribe to that strategy, pay a monthly fee, and it just trades on those strategies. And we have a set that we choose from. You know, we have an in-house team of quants that's developing these strategies. And we also crowdsource a lot of alpha with this proprietary blockchain product we've created. So we give you a list of options to choose from and give you a sense of what you may be comfortable with.
All right, so back up. Where'd this idea come from and how to get started and how they attract the smartest guy from Stanford to join them?
I wish, man. But really, our CEO was he was a trader. He liked trading. He was developing these algorithmic trading engines, right? Curiosity with the blockchain, with this ecosystem.
Was he at a hedge fund or he was just on his own?
He developed his own trading, like a platform, essentially. He wasn't at a hedge fund, but it was a algorithmic trading group.
Got you.
And he had this fascination with blockchain as well. And there's some ideas now that are coming out with blockchain. How do we blend AI with blockchain? What does that look like?
Yeah, what does it look like?
Yeah, it's complicated because typically they're on different sides of the planet. You know, AI is computationally intense. It requires these big data centers. Blockchain, you want to distribute it so everybody in their laptop and their phone runs it. So how do you actually blend them together? It was a bit of a challenge, but there's some ideas that are coming out now, how you actually solve those two. And he saw one of these really early, and he said, what would be a great application for this? Potentially algorithmic trading. And so what we essentially did was we started running an algorithmic trading engine on the blockchain. And we have people coming from all over the world simulating their trades on our system, and we can take the top ones and blend them into a portfolio. So we take these top traders from all over the world. We have an in-house team of quants. We're taking the two together to make these strategies that we're making available on Glitch.
So you use the blockchain to find the alpha? Is that
right.
it?
That's right.
And then that's one of your...
That's one of our inputs.
That's one of your inputs and strategies.
Yeah.
That's pretty interesting.
Yeah.
Now, you got a rollout coming up here, an introduction. You're kind of coming out today at Money 2020, but not here in the U.S. yet. What's your game plan?
So we're in beta right now. We're testing things out, making sure we're trying to get these bugs sorted out and make sure everything's pretty smooth. We want to roll out Q1 globally outside of the US, and we want to get to the US by the end of next year.
So it's wild. Did you ever think that your career would end up here?
No idea.
Among all the money people? You're going to save the world with climate AI,
maybe still will.
Climate science. But now you're in the thick of things.
Yeah.
So.
Well, we really want to bring these strategies to the masses. Like typically to get a high quality strategy, you have to have a huge base of capital, invest with a hedge fund in a custodial way. We want to change the game a little bit. We want to give every person that we can an opportunity to start generating wealth with these trading strategies. And
it's non-custodial. So that hopefully
turn off the strategy when you want. If you want to take your funds from your exchange, go for it.
And you get the same type of strategies that hedge funds use.
Potentially, yeah.
That's exciting. Well,
yeah.
I appreciate for coming out. It's an interesting concept.
Hey, thanks for having me.
I'll be following you closely.
Please do. Yeah.
Who knows? Maybe I'll find a strategy to make some money.
Do it. I'll send a few your way.
It's good talking to you.
Good talking to you. Yeah. Great.
Well, we're back at Money 2020, and we've taken a different pose here. We're sitting down now because we've been walking the floor so much. My guest right now is Kevin Trilli, and he's with a company called Amount. And they provide AI-empowered risk management tools for lending institutions. If Do I have that right, Kevin?
That's pretty close, yes.
All right.
We will talk more about all the different aspects
Right,
of it.
right. You feel free to correct me. So why don't you tell me a little bit about Amount and why you're here at Money 2020?
Sure thing. So Amount is a loan origination company. So we offer a process by which you can enroll for loans and credit cards. We provide all the tools, both the user experience for the applicants and then the back office tools for bankers and credit unions.
And this is really to build out the portfolio. Explain that to me, because beforehand we were talking about different levels and the risk you'd want to take, and how you want to hedge your portfolio, and this can help you do that.
Yeah,
so
absolutely.
Explain it to me.
So what we want when we're providing our products is that we offer a full set of products to our banks and credit unions. And what we're offering are things like consumer credit cards, personal loans, and then on the small business side, similar products. And so all of that we provide on a single platform that allows basically banks to offer multiple products and increase the lifetime value of their customer in a very efficient way.
So explain the additional products that it allow you to offer.
Absolutely.
Go into that for me.
Sure. So a perfect example would be is when I, for example, join a credit union, the first thing you need to do is create an account with them. So we have a product that runs you through and creates that account. The second is obviously then you want to apply for a loan for yourself, for an auto, for whatever it may be. And our platform allows you to leverage and make that very efficient so that the credit union can build up multiple product touch points with their customers.
And your target audience is what size of community bank or credit union? Your mid-tier?
Yeah.
Where do you fit
in?
in?
So historically, we've serviced the upper tier. So very familiar names like TD and Comerica, Fifth Third. We are now working in what we call the mid-market credit unions. So the single billion type of credit union and community bank.
And that's really trying to, even the playing field? I mean, these smaller regional players, they don't have the money, the capital to invest in the technology.
Right.
Or to talk a little bit about the AI.
Sure. The status quo for many of these are using very long turnaround processes when you apply for a loan. You've probably gone through it. It takes weeks, and lots of forms, and sending the same information back and forth. Our system makes that digital and very efficient, sort of step one, and that's the initial value proposition. The second part of this is then how do you make that product technology that we offer drive the profitability and business metrics of the bank or credit union? So what we're announcing today are some performance optimization tools that help the banks and credit unions take what their setup configuration is, we call it a policy. Where in the credit segments do you want to service? What is your fraud tolerance? And we actually automatically optimize that for them in the background. So they don't need to be experts on the system. The system is learning and teaching them how to improve all the little configuration settings of the product.
And AI plays a large role in both what you're doing now and your go-forward strategy,
Correct,
if I understand?
Yeah. Personally, fundamentally, I believe that AI is going to change every business-to-business software product that's out there. These products I like to explain are esoteric, and you've got to learn them and have experts in the company. So the first step we did was making our product easier to learn and understand. And this is through giving help text, asking business questions, getting information back. So that's sort of step one. Step two is then using machine learning techniques plus analytics on top that have triggers that are like agents that tell you when you should optimize the system. And then third, over time, you just have a business conversation with the system. You have a co-pilot that's helping you run your business, leveraging all the technology that you've had historically.
So it's 3 phases. And up front, it's generative AI that's doing that part?
Correct.
And then the second part is the heart of this whole process, if I'm understanding?
Correct, yes.
With machine learning?
Yes.
And then it allows you to use natural language at the end of it to really get some explanations.
Exactly. Think of this as a system where you have to write rules and settings to configure it. And we think the co-pilot over time can help you do that, both learning what you've done historically, but also learning from the base of customers in a privacy sensitive way, what are best practices.
And those are your customers, or those are a global
Those
unit?
are our customers, yes. Only.
So as one small bank, you can see what the world does
from a aggregated, safe way. Yes, we're not saying
anonymized.
You'll never know who it is individually, or both end user or company.
So all of a sudden, you gain the intelligence of a large bank.
Correct. That's the goal. And our history of we used to be a lender too. We were Avant, and we came out of and spun out of them. So we actually know what it's like to be a lender. So it's technology with intelligence is the way we like to frame it.
Well, Kevin, thanks for being with us. It's an interesting conversation. I mean, so much is going on right now in fraud and and risk management. Do you see this as an arms race that you're constantly reacting to?
I've been in fraud for 25 years and it never ends. And so I'll give one example. Like now how do you know it's not an AI bot that's applying for a loan?
Right.
Right. So you got to constantly find new techniques that kind of go with what's good for us on the AI side, but is also good for the fraudsters. So absolutely, it's the way it is.
Well, thanks for being with us, and we'll look forward to following your new introductions and announcements today. And best of luck, and let's make it happen here on the Floor Show.
Absolutely. Thanks for having me.
Show floor.
No problem.
Thanks for being with us.
Appreciate it. Thank you.
Bye-bye. It's been an incredible day here at Money 2020. We're just concluding. We've done podcast after podcast, talking to really smart people about what's going on in fintech, especially in AI. And I have my final guest of the day is David Snitkof, and he's Executive Vice President of Growth at Ocrolus. Thanks for being with us.
All right. Thank you very much. Good to be here.
Now, tell me a little bit about exactly what you do. I understand that your relationship with AI predates a lot of what we're seeing here today.
Yeah, so Ocrolus is an AI-driven document automation platform that powers a lot of the digital lending ecosystem. So we work with over 500 business lenders, consumer lenders, mortgage lenders to fully automate document-driven workflows. That means if someone applies for, let's say, a mortgage or a small business loan, we use our technology to classify all the documents, extract the data from them with perfect accuracy, perform fraud detection, and then also automate cash flow analytics and income calculations that help underwriters and lending companies make super high quality decisions with trusted data.
So let's break this down into two parts, because the first part is something I think a lot of consumers can relate to, and that is the amount of documentation consumers go through when they have to get a loan, right? Mm-hmm. And all this goes to the lender, and then it is read optically. What happens from there?
So a couple years ago when I got a mortgage, at the end of the process, my underwriter called me and said, congratulations, you had your documents so well organized that it only took us 41 days to underwrite the loan. And I said, 41 days? That's
obscene.
That's crazy. That doesn't make any sense, knowing what we know today about how to do this. And of course, the clients who work with Ocrolus, it does not take 41 days. It's a lot faster. And the reason we're able to do this is because we have a massive, massive data set of verified training data to build the world's best models for document AI. We're not always proprietary about it. We don't have to be. We can use many of the best off-the-shelf technologies from Google, from Microsoft, from Amazon, from OpenAI, and really from anyone. We can layer these in a workflow to always choose the best model or the best technology for the task. We can also build a lot of this stuff in-house too.
So educate me, right? When you say labeled training data, what exactly does that mean in your world? I'm familiar with training data for foundation models, but you're talking about something a little different.
So let's say that you're trying to teach the computer how to read a bank statement. Now, the US is a very interesting market because we have almost 10,000 banks and credit unions. So if you had to deterministically program a computer how to read statements from every bank, including PDFs, images, every possible format, you couldn't do it, or you'd waste a lot of money doing it. So we've had to teach the machine what is a bank statement, what should you look for, how do you localize all the data and everything like that. Our machines do a great job, but with any machine OCR document recognition technology, you cannot get 100% coverage. So you're always going to have the cases, let's say in a low quality image, where you need to send some of those tasks to a human. And we have a very, very large staff of document verification specialists who will get a task. They might get a task like, hey, is this character an 8 or is it a 5? And they'll say, oh, it's an 8. That makes sure that the data going back to our client is perfect. But what it also does is, from all of these corrections, generates a fabric of training data to keep our models getting better and better and better over time. So every time we get more and more documents, our accuracy is going up, our level of machine coverage is going up. And that means that regardless of whether we were able to do a single document, all with machines or with a combination of machines or humans, our clients are always getting perfect data.
And this use of AI goes back, one of the seminal uses of AI was in in document optical recognition, if I understand correctly. Even early Xerox machines used a version of it. They didn't reproduce it exactly.
Right.
They assumed what they were looking at through AI, if I understand this.
Well, that's right. I mean, there's what I would call old optical character recognition technology, which is if you have a perfect quality document, really, really optically perfect, maybe you can read the characters off the page. Maybe that works 80% of the time. That's really not enough if you're making high risk financial decisions. If you're underwriting a business loan, if you're underwriting a mortgage, if you're approving a new merchant who's on your payment network, you really want to be accurate. And that means you need to have the best of machine technology, you need to have the best AI models, but you also need that layer of human in the loop quality control when necessary. We pair all that also with fraud detection. So
Before you go there,
yeah,
your human in the loop is 1,000 Oculus employees in lockdown facilities who physically go over these and teach the machine any kind of anomaly so that they know it in the future.
That's right. We have our own employees. We don't outsource this. They're in our facilities. It's incredibly secure. And what these employees get is a task. They'll get a task saying, what's the classification of this document? What is this field? What is this word? What is this number? So they get these very small atomic tasks, and we stitch all the data back together so that it goes back to a client in complete, fully quality controlled form.
Now, I interrupted you. Let's go to the second half, and that's the fraud detection and the analytics. So this is where the more contemporary notion of AI comes in.
Yes.
So give me some ideas into that, some vision into that.
So fraud is an unfortunate part of lending, right? You're in the business of giving out money. Someone is going to try to steal that money, and fraudsters are very motivated. The successful fraudster makes a lot of money, and so you always have to stay a step ahead. The good news is, because we have dealt with literally so many hundreds of millions of documents, we've been able to figure out the patterns of fraud. So we've developed software that can go deep into the guts of the document to really see edits that someone has made that are not visible to the naked eye. And so has someone changed an account number, an address, a balance, even if they've made all the numbers reconcile perfectly and used what they think are all the same fonts, we can dig in and detect those malicious changes, let them come back in our API feed to our clients and actually show an underwriter or fraud analyst at a lender exactly what was going on in the fraudster's activities.
So you are securing the authenticity of those documents, much like maybe the Secret Service does with our currency.
Yeah, who knows? Something like, I don't know what they do actually, but maybe they use something like that. The other use case for AI, and I'd say machine learning more broadly, is in cash flow analytics and income calculation. So we work with almost 200 small business lenders today, and they're not just using us to read the data, they're using us to do incredibly deep cash flow analysis on every merchant that they try to underwrite. So for all the transactions in bank data, we're analyzing if those transactions represent revenue, expense, proceeds from a lender, payments to a lender, non-sufficient funds transactions, recurring transactions, and about 60 other different categories of activity. And then we're using that to generate a feed of cash flow credit attributes that help them make a very, very good risk and pricing decision for that application.
It's fascinating. So your target market is it mid-sized lenders, large lenders, banks, credit unions, regional, national?
We really have all of those. So we have banks, we have non-banks. If you look in the fintech world, we have many of the largest non-bank lenders you could think of, people like PayPal, OnDeck, Funding Circle, Bluevine, and those have all been great customers for a long time. We also have really excellent clients on the mortgage side. We have about 100 mortgage lenders on the platform, including some really big ones. And that's a very interesting area of growth too.
Well, it's fascinating because I was thinking, when you came up here, document optical recognition, that's not very sexy. But when you link AI with that, it all of a sudden becomes very meaningful to an organization as far as risk management and analytics.
Right, and I've been in the risk world for a long time, and risk is all about decision making. It's about making a high quality decision with trusted data. And what every organization wants to know is, what is everything they can possibly learn about the financial health of their consumer or business borrower? And so it's, as we said, it's one thing to read characters off a page, it's one thing to classify documents. It's another thing to go very, very deep into the income, the affordability, the debt capacity of a borrower so that you can really understand, do they have the capability to service a new loan?
You've been at this a long time. What most surprises you about AI now that it's here, it's real, it's accepted? What has captured your imagination?
What's very interesting to me today is how you can start solving problems that are not deterministic in nature. So many problems in lending have been, we have data about someone, now let's put that data into a rules engine or a traditional deterministic machine learning model and get an answer. But there's a lot of exceptions. And lending is all about exceptions, especially in the area of fraud. With generative AI, you can start taking some of these non-deterministic workflows and actually making them more efficient and helping, let's say, a human underwriter, a human loan processor, really magnify what they're able to do. So in our experience in the mortgage industry, what we found is that mortgage underwriters who are using Ocrolus in their workflow, a single underwriter can do many times the loan production in a day than what they were able to do before. We're not replacing the underwriter, we're augmenting them with the technology so they can be more productive and actually more accurate and make fewer errors.
They can do it more, and with the entire corpus of the training data behind them, which is an amazing, amazing tool.
Right,
David,
you're making an AI-powered underwriter.
That's unbelievable. Thanks for being with us, David. It was an interesting conversation. We're sure to keep an eye on you and see where you go in the future. But it's been a great show, and I appreciate your time.
Thank you very much.
This podcast is a production of Gregory FCA. If you enjoyed our discussion today and want to continue exploring the transformative power of AI, please check out more episodes and subscribe wherever you listen to podcasts.